Many investors are asking why gold isn't going up more than it is. We have wars in Iran and Middle East, we have war in Ukraine, and we have massive deficits and debts, and the geopolitical situation combined with the political situation is worse than it's been for many decades and maybe even centuries. The debt is of a proportion that worldwide that has never occurred before in history. So especially with these wars, investors are asking, why isn't gold going up? But what you have to understand is that gold is not going up because of temporary happenings in the world. That's a war or whether it's a political problem in the US or in Europe. Gold goes up because paper money is being destroyed continuously by central banks and by banks also by issuing and leveraging more and more debt and credit to the consumer and to companies. So gold is not reflecting short-term situations in the market, such as an attack on Iran or a war in Ukraine. No, gold is reflecting the destruction of paper money. It's so simple. These short-term events, they have a very, very short effect. You could look at, for example, 9/11. Gold went up temporarily and then it went down again. And it's the same now. We've had bigger bombs than ever dropped on Iran in the last 10 days, and gold hasn't gone up. It's actually come down a bit. So you must understand that this is not the right way to look at gold. It is not a crisis investment. It is an investment that protects your wealth against central banks and governments' destruction of paper money by issuing more and more credit. In front of me here, a long-term graph of gold in US dollars. You look at from 1971 to 1980, gold went from $35 to $850. So that's a long period, 9 years, and it went basically straight up with a couple of corrections, one bigger one, but still, corrections are part of the game. And then we had a 20-year correction down to $250. And now since 2001 or 2, gold has basically gone up again in a straight line. Again, we had a correction at 2012 to 2013 or 15, and then continued on again. So this is the way to look at gold. You're not holding gold for short-term gratification. You're holding gold for long-term preservation of capital. That's why, of course, you have to hold physical gold and store it outside the banking system. So no one should worry about short-term corrections because these will happen continuously. We went into gold as a company, and for our investors in 2002, we told investors that you should buy gold for even up to 50% of your liquid assets and hold it, not to trade it, to hold it. So no one looked at gold at that point. Gold was, as I said, $300, and nobody was interested in gold because it's been going down for over 20 years, and therefore it was totally uninteresting for the normal investor. That's, of course, the time to buy an asset when it's unloved and oversold. But since 2002, basically gold is up 10 times in dollar terms, from 300 to almost 3,000. As I have explained before, it's not gold going up, it's the dollar going down and all the other currencies going down. So people should not be concerned about short-term events when they hold gold. They should just think about holding an ounce, a gram, or a kilo, or more if you're a wealthy investor, and just think about the weight you hold, because measuring it in a paper currency has no relevance whatsoever, because that paper currency is falling by the day, and therefore you might as well measure it in something else, like in hamburgers or McDonald's or in chickens. That gives you a better measure than measuring it, a currency which is being destroyed by the day and has so far fallen 99% since 1971. So what I'm trying to impress on you is that don't think about short-term events as important for gold, because they're not. It's the long-term mismanagement of the economy by governments and by central banks that has a major influence on the money in your pocket, on the paper money, and thus destroying it on a daily basis by debasing it. All gold does is reflect that, and therefore buy gold, put it at the bottom of your wealth pyramid. You don't look at the price daily. You just know that over time, gold is the only currency or the only money that has survived in history and will continue to do likewise, because at the current time, governments around the world are creating more debt and running bigger deficits than ever in history. So thus, it's such an easy investment. And really, if you want to sleep well at night, hold gold. Don't look at the price for 10 years. You're likely to see it much higher, like we have seen in the last 25 years that we've been involved with gold. And as I said, the likelihood is that paper money will now be destroyed at an accelerating rate, which means that the move in gold will not be as slow as it has been, all those up, as I said, from 300 to 3,000 in this century. But we will probably see an an accelerating rise of the gold price to probably multiples what it is today. But remember, you're not holding gold for a price gain. You're holding it for wealth preservation, because most other assets, especially your paper money, but also a lot of other paper assets which are now overvalued, will lose substantially against gold in the coming years. Thank you.